Hello, everyone. My name's Tim Reid, real estate agent in the Calgary area. Here we are again, a little bit late with the market update for what happened in March. Wanted to go over the trends, what's going on there, and as we can see moving forward, what's going to be happening on the new market report after I get that this week. What happened in April, just finishing there. So we're going to talk about condos. We're going to talk about the inventory levels there. We're going to go over some trend lines, look at some graphs of what's going on activity in the marketplace, what prices are headed in each direction, what's happened recently, and where things are likely to go in the future. A lot of things going on in the world right now that are affecting interest rates, what's going on with inventory, migration levels. Where are the jobs at in Canada? Where's the job growth? And what does that mean for investment real estate? So, stay to the end. We're going to talk a little bit about how to position your offer for success in a balanced market, an up market, a down market. What are the key things to be able to get your offer accepted? Things that we work on and show our clients looking for residential properties here in Calgary. Look forward to getting into it. Let's get into some stats. All right, well, here we are looking at the statistics. What is going on here? So, what's happened recently is prices are down year over year, about 4.2%. The average total residential benchmark price has dropped to 565, 600. That was significantly higher over the last couple of years. We're seeing inventory and demand sort of meet each other in the middle. A lot of balanced conditions going on right now in a lot of different property segments. But again, depends on the asset you're looking at, whether you're looking at single family or looking at condos, two very opposite ends of the spectrum, and we're going to go into that. So new listings, way down, again, seasonally adjusted. That's pretty common. Listings are going to trend down at this time of year. Detached price down 3.3% year over year, still holding close to 740, so at 742 here. Semi-detached down just a tiny bit. This is row houses, half duplexes. These are properties without condo fees. So this is going to be something we're going to talk about a little bit more detail, why that matters for you looking at your different types of properties. So row houses down 6% year over year, down to four and a quarter almost. And that's getting to be, more affordable. They were in the 450 range. There are some properties in Calgary that are brand new that are in this same asset class that are in the 500s, $525,000 up to $575,000, depending on the area, build quality, and community. And then apartments. So condos are still depressed. They're seeing downward pressure on pricing, down 9.3%. That's almost 10% year over year change, down to an average of 300,000. And it's certainly there are a lot more affordable condo properties out there. If you're looking for a starter home, there are properties in the under 200 mark and low 200s. There is definitely opportunities in that. If you're moving to Calgary, you might not know where you want to live, but you don't want to rent. It could be a potential option to rent a condo for a little while you're looking at different communities and finding out where you want to be. Calgary is very large, it's very diverse. Depending on where you're going to be working and what type of lifestyle do you like, you might want to be downtown. You might want to be down in South Calgary. You might want to be looking at possibly the newer Northwest or parts of the new Northeast. There's a lot of new development in all of our quadrants right now in Calgary, so you do have options. So definitely reach out to us at the number below and the contact information if you want to know more about apartments or single family houses, what's going on. So the last metric, which is really something important, I think, to look at, and what does this mean? Months of supply. People always ask, what does that really mean? What it means is currently with the current trends of sales we're seeing, if no more new houses got built, not one more single house came on the market for sale within the next 2.87 months, then we would see all the houses get sold. So that's what that means as sort of an interesting metric. It's kind of hard to understand. I want to make things simple for people. So the real estate board lingo, months of supply means that we've got about 3 months of houses if no more new houses get developed or come on the market, which we know is not true. There's always new houses coming on the market. There's resale properties coming on the market any given month. Even the slowest months, there's houses for sale. There's never zero, but that's up 20%. So what that means year over year, lots more properties for sale in Calgary at this moment compared to last year. That is what that means for us. And we're going to move into some charts and we're going to really look at apartments here in a second. So, like to look at the overall price trends. What do we see here? Lots of downward arrows. Properties are getting a little bit cheaper. So, Northeast year-over-year change down 8.2%. North Calgary, that's the new north quadrant there, 7.5% down. Northwest down just a touch, 3.8%. Southwest, our most expensive neighborhood, tends to hold its value better than everywhere else because it is the most desirable for some people area of town. A lot of expensive homes in this neighborhood. This is where our luxury uh, Calgary corridor is centered upon. There is luxury properties in other areas of Calgary too. Doesn't mean you can't buy a $3 or $4 million house in other neighborhoods. There are some, but they are concentrated in our southwest quadrant here in Calgary. If that's what you're looking for, thus a smaller price change is reflected here. So in the core, down about 4%. That's going to have a lot to do with condo sales, condo development, and some new development infills in the interior corridor here. So east of Calgary, down 5%, pretty significant change, down to an average of 410,000. The newer south west corridor, down 2.6, a lot of new homes in this area. Uh, Lots of new communities being built here. So again, smaller price pressure down in those neighborhoods because there's a lot of new builds propping up that price average to 574.5. And down in the southeast, almost 6%, 5.7% down in that corridor. But if you look at the two new south corridor sides of Center Street, southeast, southwest, not a whole lot difference in pricing, even though one saw a 5.7% drop, average 550, average 574, not a material impact on pricing when you're looking at shopping and for your approval, not going to make a huge difference. So affordability, very much the same in the new south. And again, our most expensive corridor up to the 700 mark. Lots of luxury homes bringing up that average. All right, now let's look at a couple of the graphs. I like to check in on these. What are the trends, over a long period of time versus what's going on the ground or right now? So total new listings. This is our 10-year trend line, the red line right here. So new listings is not reached or exceeded the area we normally see over a 10-year period. So that is staying relatively stable. And then we move on to detached sales. So this lovely graph here showing us what's going on, the 10-year average with new listings. New listings versus the 10-year average. They're it's not quite up there yet, but sales was lower than the 10-year average by quite a bit. And one of the reasons why people ask me what's going on with single family homes, look at all these new houses being built and all these communities. Well, here's the reason is that we have a lot of large developers here in Calgary, and we certainly have some small and medium ones too. But all of the very large companies, we're talking about Genesis, Cardell Homes, Jamin Homes, like these Calgary-based developers have, and some of them are national developers as well. They've seen the ups and downs of the Calgary market and the Alberta market at large many, many times over the last 40 years and 30 years and even 50 years plus in some cases, that they've been able to see the trends. They know what's going on with sales. They've got their finger on the pulse of the market, so they've scaled back their delivery of new homes so that they're in alignment with demand. And in some cases, they're even constraining that a little bit because they don't know exactly where everything's going to go, economic wise, pipelines, politically, economics, all these things, that where are things going to go. Right now, they see demand declining. They're constraining inventory so that they can make sure they can sell the lots that they have, sell the homes that they're building, and meet that to the demand. There's always a segment of the market, and maybe that's you. If you're looking for a brand new home and you want home warranty, that's a different type of buyer. They're looking specifically for new homes. They don't want a resale home. They don't want a used house. They want to be the first person that's ever been in it, just like a brand new car. And there's always a percentage of the market that's looking for brand new. And there's a large part of the market looking for resale, and some might consider both. So if you're looking for new homes, very different mechanics around that and some things you need to watch out for. So please get a hold of us and we'd love to chat with you about that to navigate you through the process of buying a new home if that's what's for you. But that's what's keeping this inventory and sales in alignment. We're not seeing oversupply of single family homes. We're certainly not seeing an undersupply, and those builders are keeping the new inventory level. There's always going to be resale homes, so used homes being sold at any given time, but people are kind of holding on to their homes right now, kind of interested to see where interest rates are going to go And properties in good condition, good communities are going to sell relatively quick because single family home inventory, I would say, is very close to demand or maybe even a little bit underserved right now. We're looking at all the numbers, not just looking at the big picture with everything lumped together. If you're looking for a new home, it might be a little bit competitive, brand new house. If you're looking for single family homes, it is competitive in certain communities right now. You may still see multiple offers. You're going to see people sticking to their prices, and there is some competition, and there's some areas that are very in favor of the buyer. If you don't want to know what and where that looks like, please reach out to us. We can give you some more detail on that. So that's single family detached homes graph for the month. And now here we are with the apartments graph. So what is this showing? This is showing new listings way above the trend line here. So 10-year trend line, new listings way above typical. And this is what happens with condominium construction. It has a very large inventory pool that gets approved, gets put into construction, and it takes a long time. It takes 2, 3, and 4 years to get these very large projects with hundreds of units approved. Thanks, City of Calgary, that's part of their development process takes so long that they wind up with a lot of properties hitting the market. They wind up with a lot of properties being sold on the resale market because people have had those condos for a couple of years. Their value's gone up in most cases, and then now they're trying to liquidate to buy a new house. They're buying a larger property, for example. They need a townhouse now. They're going to buy their first home now. They're upgrading from the condo. So not only does a flood of new supply hit the market, but there's also a flood of resale properties hitting the market too. And that's the condition we have right now in Calgary. A ton of people looking to sell their condos, a ton of new properties being input into the market by new development. And that is what's showing an oversupply, this condition here of condominiums right now. And sales under average. So sales are under average, and this is, in my opinion, about to get worse. That if you're looking to sell a condo right now, could be a tough time. If you want to look at the numbers, if you have a condo you're thinking of selling, by all means, let us know. We'll give you a free evaluation and some strategy guidance on that. But now is going to be a tough time to sell condos. It's going to be a tough time for the foreseeable future. They're the first to correct and longest to recover condominium sales. And that's just the nature of the fact there are so many of them in the market at any given time, and they become oversupplied easily, and their absorption takes a while to recover. And by absorption, I mean sales of those properties catching back up with the inventory levels. All right, let's look at semi-detached. So semi-detached is a number of property types. That's going to be a half duplex, for example. That would be considered semi-detached, and it also does encompass condos in a lot of cases. So this is a pretty just about even to 10-year trends. Looking for new listings. So the pretty balanced, behavior going on here in this particular market, and sales is pretty close to demand too. So we're not seeing a whole lot of, price competition in this because it's sort of meeting the demand at the moment. That could change over the balance of 2026 because we are seeing a lot of new construction completions. There is going to be a lot of inventory hitting the market, so this could spread apart. Right now, we're seeing balanced conditions there. All right, and we're seeing row house sales do something a little bit different. So what we're seeing for sales is row house sales have actually increased a little bit over 10-year averages. Why is that happening? So this condition here happens when people want to trend away from condos because condos have condominium fees, and you certainly get something for your money for that, but it does affect approvals. So when interest rates go up or interest rate uncertainty goes up in the minds of buyers, people are wondering what they can afford, what might change by the time they find a property. Will their approval change? Is their locked-in rate going to last that long? When we talk about pre-approvals, we're going to get to that to the end of the video here as well, is that this is a bit of fear around condo fees, lowering your approvals. So people will seek out properties that are row homes that don't have condo fees, and they're similar style properties, but they don't have condominium boards, they don't have condo fees attached. Often you take care of your own lawn, your own snow removal in these types of scenarios. There's a lot of three-story properties, so sometimes you can get a larger row house than you can a condo in a given area. That's a potential benefit of looking at row homes, and there is no condo fees again. So that changes your approval rate. You can buy a little bit more row home than you can condo for equivalent approval because those condo fees, are considered a cost to the bank. and they lower your amount that you can afford, considering your total expenses and income that you have for your family. So that's why row houses are trending up. And there's a bit more supply right now than there is over the 10-year average because we've had lots of new construction, lots of new communities expanding, lots of new subdivisions have been started. So that's trending that inventory up a little bit more over long-term trends. Because row houses don't always get built. Here's the other thing that's interesting is people will build a lot more condos. Developers will build those a lot more often than they will build row homes. It's just a typical construction mix is that row homes we built a little bit less frequently than townhomes, and that's why historically you'll see a lower supply of those over the years, and they come in waves as you kind of see over the years. Lots of them built here, not so much, trending up again, and now sort of trending strong for new construction development of this property type. So they are overall a little bit more rare, certainly without those condo fees than condos in any given market. So I call them townhouses. Typically, that's condo fees attached, and row houses are going to be the ones without condo fees. All right, and I always like to finish off on the graph. I always like to finish off on the Calgary map and highlight a couple of things. So talked a little bit about growth. I talked about what's going on here. This is where kind of Stony Trail comes up, the northeast corner of Calgary. This area, lots of new development, lots of new homes here, lots of every property type, condos, row houses, single family homes. There's been a lot of growth in this area. Cornerstone, Redstone area, very close to the airport, very close to a lot of new commercial construction being built up here. So you've got shopping, lots of ethnic specialty food stores, depend for every culture you can think of, and very very good access now off of Stony Trail. So this part of the Calgary corridor, lots of growth going on in this community here. There was more growth and development in what I call the new Northwest here. It's slowing down a little bit, but there is new homes and new homes being built here. Lots of appreciation has been seen in these communities for the last couple of years because there's been a lot of growth, a lot of new people moving in, and that starts to drive up prices. And also, they're getting more filled in. When more filled in the community, what I mean by that is has grocery stores, the schools are starting to come in. You've got shopping and amenities, those get built up over time in a community when someone's developing a subdivision because it takes many, many years, 10 years, 20 years, sometimes 30 years for a community to be fully built and there's no more homes available in there. And that's what we've been seeing going on in these corridors here, as well as in the new southeast and the new southwest. So these are communities like Seaton, Mahogany, and Auburn, past Auburn Bay. These are some of the new communities here. Lots of new development, lots of really great shopping down here now. There's new movie theaters, Legacy, uh, as well. These new communities here, Belmont, the these neighborhoods are being built out. They're starting to get their shopping, they're getting their amenities, and again, they're also connected down by Stony Trail. Big difference now that you can just get from the north end to the south end of Calgary in 30 minutes, taking the Stony Trail uh, uh, from top to bottom, makes it much more accessible, makes it a lot easier for people to live in these communities and work downtown or work up at the airport, for example, or some of the new industrial corridors up in the Northeast as well. Lots of new industrial warehousing, different activity going on up here in the industrial parks up by the airport. So you could work up there and live here, live down here in the South, creating a lot of options for consumers. So that's where the growth is happening. And that's what's going on in the market for March. And now we're going to move on to how to get your offer accepted, how to position yourself the best way. So here at the end, as I promised, we're going to talk about best practices. So here at the end, as I promised, we're going to talk about best practices to get your offer accepted, no matter what the market is doing, whether it's up, whether it's down, or whether it's going sideways. So first thing you need to do is get a pre-approval. You need to talk to your mortgage broker or talk to your bank. I suggest you work with a mortgage broker, and I'll give you lots of reasons why when we meet in person. And please reach out and talk to us with the number below, or send us an email, or even a message on social media. We'd be happy to chat with you that way as well. Is that Number one step for buyers is getting pre-approved. Now, this is for residential, of course, not for investment real estate. For residential, you get a pre-approval from the bank that locks in your interest rate. You know exactly what your payments are going to be. You know exactly what your closing costs are going to be. And as I spoke about before, if you're looking to buy a condo or townhouse, those condo fees need to be budgeted in to your approval. So you know exactly what you can afford and what you're comfortable affording because you don't want to buy too much house and be house poor. Want to make sure that you're happy, you love the home that you're in, and you can afford that without causing stress for your family's finances. So number one, get a pre-approval that locks in your interest rate. Then you know exactly what the fence posts are for your budget. So you know what the cheapest homes can be for your type of property you're after, and what the maximum affordability is, so you know where to shop that way. So first of all, is get your pre-approval. Second of all, is start looking at communities that you want to live in. So someone coming to me and saying, "Hey, I want to buy a house in Calgary," that makes my job very much impossible to be able to do that because there is multiple types of properties, there's multiple communities, and they all have advantages and drawbacks. And I would love to walk you through that if you have questions about certain communities, the schools, the traffic. The new development, how many renters there are, because every community is different. It's going to have a percentage of renters, a percentage of owners. It's traffic, snarls are different for sure. I mean, I'll give an example, Marteloup here in Calgary, beautiful Southwest community, lots of new development. It's been a traffic nightmare for the last 3 or 4 years because of all the huge construction going on in there. They've had to do infrastructure upgrades to the roads. It's been, quite frankly, a mess. So, wanting to move in there and drive to and from your house every day could be a really big challenge right now. So, knowing what communities you could be interested in is a great second step, knowing what community you want to be in. And then number three, knowing for sure what type of property that you need and what's really important for your family, because sometimes that's not always clear between all the stakeholders. And the stakeholders could be husband and wife, it could be the kids. They want to have their own room in the basement, they want to have a big backyard. What are the elements that is really important to your family? And these types of things really help you to understand where your options could be and what price point could work for you as well. It helps us find properties for you that are on the market, more importantly, off the market. We have access to private sales all the time, and these come and go very quickly. So we want to make sure that we have a targeted criteria so that if that's the type of property you're looking for, and then you don't have to compete, you go look at it privately. Nobody else has seen that property but you. That's something that we can do for our clients on an exclusive private listing basis or through our connections, through investments, and all of my partners in real estate as well, that you can use exclusive access to those properties. But I need to know exactly that that property fits you because they do move quick, and we need to make sure that you can see it before everyone else does because they're moving very fast, which we call wholesale deals. So having your criteria is number three, and then having that criteria also helps knowing that you can confidently make an offer at a certain price. So, of course, we want to make sure we protect you, have the right conditions in the offers for you as well. But knowing that that's the right house, the right criteria for you, that you can move a lot quicker and make decisions with your family faster after we see a property. Sometimes we have to go see it again, might have to look through with contractors. That's no problem, but then we have a very good criteria. And then knowing the offer process. So we will walk you through that, of course, and having confidence that you know you've got your bank support, you've got that pre-approval, that we can make a strong offer. So what does a strong offer look like? Well, that usually has three typical components. Number one, as large of a deposit as you can manage for your initial deposit, which will form part of your total deposit that you need to give, that your mortgage broker told you that you have to do for the purchase, be it 5%, 10%, or 20% down. And that will make your offer stick out. Secondly, is having quick conditions. So having our property inspection team lined up, which we certainly can do. We've got multiple property inspectors. We can get them in very quickly. So short condition terms, that definitely helps. And having a short financing term as well. So if we have 10 days for financing, it might look like you're not pre-approved. And these are things that I can tell the other agents or the private sellers, this client's pre-approved. They're already good for the mortgage. Their budget fits this particular home, and we know the financing is not going to be a challenge. Short conditions, and then being able to negotiate quickly when we get feedback is the last. factor. So people are busy. We know that you're at work or you could be out of town sometimes traveling after you make an offer on a home. These things happen, but we need to make sure we can be in touch and be in communication one way or the other. When we get feedback from the sellers, they want to accept our offer, but maybe there's some changes that they want to make. We need to be able to discuss that as a team. So those are the three elements to getting your offer accepted. And if you want to know more about what's going on in the residential real estate market, or just have some general questions about real estate, whether it's investment, commercial, or otherwise, please get a hold of us at the number below. My name's Tim Reid, real estate expert in the Calgary area. Look forward to seeing you in the next video.